Hey, David, I was just asking you, when you go to your reunions, do you find yourself in a blue bubble?
When I go to my reunions,
Yeah.
I guess I don't know. I haven't really thought about that. That's a good question.
I just got
Um,
back from my 45th, and 90% of the class voted for Biden, and they hate the 10% of the class that didn't. I mean, it was so extraordinarily left wing. I thought to myself, I don't know if academia is going to survive this, but that's another question for another day. I want to know if we're going to survive those job numbers, David, or is inflation back now?
well, no, inflation's not back, and one of the problems with the question is it does presuppose Phillips curve, and Phillips curve needs to be thrown in the ash heap of history. So the reason why the jobs numbers are not inflationary is because people producing new goods and services is anti-inflationary. It is not pro-inflationary, and this has been one of the great mistakes of left-wing economics for over 50 years. More people having jobs is a good thing. It is not a bad thing, and that applies to inflation as well. And even if one was petrified, even if one was hand-wringing, which apparently our central bankers are, about the awful idea of people having jobs, the fact of the matter is the jobs report on Friday was still sort of a mixed bag. There was a great amount of new jobs created, although the household survey showed 300,000 jobs lost. And so the data is still not quite synchronizing there. But it was also really, really weak wage growth. And so
Let's
this
roll that
so-called
video if we can of our job growth stuff because I want the numbers. I think the animated numbers are there. David, everybody reacted as though that means the Fed will raise rates again. The job growth thing. Do you think that is the case?
No, I do not. And you're right. Everybody in the media did react that way. But you know who didn't was financial actors. The Fed funds futures market went higher in its pricing of no rate hike. We're up to about a 79% chance in the futures market of no rate hike next month. But interestingly, the futures went up for a rate hike the next month. So a lot more people seem to be betting on this idea of a 1 month pause, which seems rather silly to me.
All right, now, David, I want to switch subjects on you because you manage a lot of people's money. And let's get the AI video ready here, right? How much is under management at the Bahnsen Group?
$4.25 billion.
Okay, so if you screw up, if you have a bad day, you lose a lot of money.
Yeah, that is true.
But if you have a good instinct of where the market's going, you make a lot of money. The AI boom is the subject of a Washington Post story this morning that says bearish bets against S&P 500 are surging despite love for big tech. And there are many other stories on the AI revolution and how Microsoft and Amazon and Google and NVIDIA are the only four stocks you want to own right now. What do you think about this from an investor standpoint?
Well, I think it's exactly the perfect setup for people to get their faces ripped off as
Ha!
investors. And so essentially, this idea that everyone is going to pile into a company. Look, NVIDIA is going to make good money off of AI, but NVIDIA is trading at 200 times earnings. It is trading at 25 times gross sales, gross revenue. So some of these things can be true, that there's a big new thing happening, and they can be really bad investments.
Now, David, can you translate that for my Steelers fans? Because we got a lot of Steelers fans listening on WPIT, and they just have no idea what that meant, what you just said.
Okay, so let's put it in perspective for all football fans of that conference. It is it is far too expensive. It is good news, but is already priced in, and so you're going to overpay for something, even if it becomes true. And the problem too, Hugh, with this AI thing is you got to pick winners and losers, and nobody has any idea who's going to win or lose out of it. So the fact that someone's going to make money, that something is happening that is really new and fresh and creative and innovative, we get all that. But now you risk overpaying to invest into this little new surge of optimism, and you have to pick which companies, which is going to be very, very hard to do.
Now, I've told people for years, the only two stocks I own are Amazon and Palantir. Everything else is mutual funds because I'm not smart enough to do this. And I have Amazon because it's diversified within itself. And I like Palantir because Peter Thiel's brilliant. Other than that, I don't play this game because I can't beat you. Yeah, can we communicate that? People like me cannot beat people like you. Will you explain that? And again, let's go to Steelers terms. Why can people like me not invest, but people like you can invest?
Well, look, I think that for most people, the reason that they can't invest on their own is not necessarily just intellectual, it's behavioral. It becomes really emotional. People fall in love with a stock, they anchor themselves, or they don't allow themselves to admit when they've made a mistake, and so they become overly stubborn. One of the things I think I've done well, we've made a lot of mistakes here. I mean, I obviously don't do this perfectly for 25 years. However, I am not emotionally tethered to it. Like if I make a mistake, I can accept it and move on real quick. And I think that that's one of the big benefits of people use outside management. But, you know, the whole thing is information is constantly coming in, and you have to be able to process what is real information and what is
There
noise.
it is. That's why, David, I tell people I spend 8 hours a day getting ready to do 3 hours a day of news show. And that's my 11 hours of working. I don't do markets. You do I see you on CNBC, I see you on Fox Business, and you kill it because it's what you do, right? And so if people don't do this, they're not going to be able to keep up with people who do this.
Well, I think that's right. And I also think, too, that these days, what it is people are doing, I mean, I'm obsessed with macroeconomics. I care about public policy. We're looking into the monetary policy side of things more than anything, which is really a huge driver in markets. And so that is the type of stuff that is difficult to do at a high level and then apply to particular investment decisions. But right now, anybody who's trying to make big long-term investment decisions without a view of the Fed, I think that they're going to get their faces ripped off.
Well, David, that brings me to, quote, modern monetary policy, close quote, which I always thought was a scam, and it turned out to be a scam. What has anyone surfaced that idea recently, or has that been put on the back shelf with all the other Keynesian economics?
Yeah, I mean, it's funny. Even the leading Keynesians like Paul Krugman really opposed MMT from the beginning, this idea of modern monetary theory that you could essentially print whatever you want and then you could control inflation by raising taxes later. There's a form of it that's been going on in Japan in 30 years. And the best case scenario, and I mean best case, which some people would take, is you can do it and just get no economic growth again. And our society would never tolerate that. We will not put up with having no economic growth. The problem we're living through right now, Hugh, is everyone thinks that what our angst is wealth inequality. What they don't know is that the reason people are upset about wealth inequality is because there isn't enough economic growth. Nobody cares about inequality when they're all doing better.
Okay, David, last question for you. The housing market is the subject of a number of stories this morning, which I'm not getting into, but affordability is retreating as interest rates rise and as home prices do not come down. How significant a problem is this for America's future that we're not building houses?
It's a massive problem, and it's both economic and cultural. You have a huge problem of not only people not being able to buy homes, but then those who do don't ever leave their homes because they can't afford to do anything. They're wanting to work from home. They can't go out and participate in society because now all of a sudden their home payment is taking up 50% of their income instead of 30% of their income. And this affordability issue is something that people have wanted. They think it's a good thing for houses to be overly expensive, and it is completely discriminatory against asset holders versus non-asset holders. And ultimately, it is really adding to this cultural divide. You have to build new housing stock. You have to have a normalized cost of capital, borrowing rate. Otherwise, people are stuck in their homes forever.
This is why we have David on. Follow him on Twitter if you want to be smart. David Bahnsen, Bahnsen. If you got a lot of money and you need someone to manage it, this is the guy I'd go to right here. David, thank you.